Today is Tuesday, January 17th, 2017, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Steve, what were the highlights of the weekend ADMIS broker meeting?
I think the first thing was that almost every speaker tried to figure out the impact newly elected President Trump is going to have on the markets. And I think Hightower was talking about long-term, maybe some weakness in the dollar and weakness in the stock market, which is contrary to most people's feelings. He also looked for crude oil prices to move higher and had an objective of $67 if we can get some kind of turnaround in the global economy, especially in China. As far as the grains is concerned, Ag Resources spent the whole time talking about how bearish everything was and had too much supply, but then his last few slides talk about his weather guy saying that we might have some dryness in eastern Russia and U.S. Midwest this summer. So it's like he's neutral because a lot of the numbers are bearish. We don't know too much about the weather this summer across the globe. And today, bean prices, corn, wheat are all sharply higher, led by the beans and because of some concern about Argentina weather, which people did talk about.
Okay. What is the next key USDA report that might impact the market?
Late in February, the USDA has an Outlook conference, and it's the first time that they sit down and look ahead for 17 and 18. And as far as the market is concerned, they put out some numbers in November which showed carryouts declining in 17 and 18 because of maybe a little bit lower acres and maybe trend yields. But the big question is just what's the demand going to be? And right now, if we plug in a little bit of inflation, if we plug in a little bit of disposable income increase here in the United States and maybe China, we could have better demand. So right now, that report, people are not only going to focus on what they say, but who's the new Secretary of Agriculture and what is his goals as far as agriculture is concerned over the next 4 years.
Alan, concerning the outlook for gold in light of the bearish influence of a rising U.S. dollar and expectations of tighter credit from the Federal Reserve, what is the outlook for gold futures market now?
Well, first of all, gold put in a very good year in 2016, although it finished on the weak side. Last year, gold was up about 9%. So traders coming in a little disappointed in the first part of this year with those second half losses that we saw. But in the last couple of weeks, though, we have seen the gold perform very well. Both gold and silver have been up quite a bit. And even today, gold was up as much as $21 an ounce. So good gains that we are seeing recently. Also, it looks like inflation is coming back, and I think it's going to come back in a big way. So with gold up 9% last year, approximately, I think we will do much better than that. Look for at least 9%. I would say potentially much more than that. So continue to trade gold from the long side. There is a lot left in this bull market.
30-year Treasury bond futures topped in July 2016. There were severe declines in the last part of 2016, although there has been a partial recovery made more recently. What is the outlook for the 30-year Treasury bond futures in now?
Okay, well, right now we're up against some major resistance areas, and there has been some short covering over the last month or so. But I do think that if we're right about inflation coming back in a big way, that the bond market will be most adversely affected by this. So I'm looking for futures to roll back over to the downside, and I would not be surprised to see some new lows for the move. So the trend is, I believe, clearly lower for the bonds, and this is a trend that should last, I think, all this year.
S&P 500, Dow, and NASDAQ futures advanced to record highs recently. What are the reasons for this historic advance, and more importantly, will it continue?
Well, it's the low interest rates globally, and even if the Fed raises rates several times this year, which it appears very likely, we're saying only 1 to 2 rate increases. The Fed's saying 3 rate increases. Some of the banks saying 4 rate increases. Even with 3 or 4 rate hikes from the Fed, rates will not be high enough to actually reverse this bull market. Also, keep in mind that when any market makes new historical highs, that quite often the trend continues, and this is a general rule of thumb that applies pretty much across the commodities universe. So our outlook remains very bullish for the indices. I think we'll see new historical highs across the board in all of the major stock index futures.
Thank you. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.